Gamma blast. No, it's not a type of nuclear explosion that can wipe the entire planet. Instead, it is an awesome options strategy that can help you make a fortune. Have you ever noticed how, on expiry days, options trading at dirt cheap prices like 3 or however 5 suddenly skyrocket to 60, 80, or even 100, especially in the late afternoon? It's like magic, but it's not. It's all about the gamma blast. So, how does this happen? These wild price jumps occur due to a sudden movement in gamma, which can make an option's price increase 5 to 10 times in no time. And today, we're going to show you how to catch these explosive moves. Before we get into the charts, there are a few crucial rules to follow for this strategy to work. Entry timing. Your entry should be after 2:30 p.m. This is key because most of these explosive moves happen in the late afternoon. Market movement. The market should not move more than 1% in a day. This means it shouldn't be a trending day. Sideways days or zigzag days are fine, but not trending days. Straddle chart. Focus on the ATM at the money options straddle chart. That means same strike call and put options. For example, if Nifty is trading at 24,195, then 24,200 becomes the candidate for the straddle chart. Now, if you're wondering what the straddle chart is and why it's important, let me break it down. A straddle chart is a graphical representation that displays the price movement of a straddle option strategy. It shows how the option's value changes in response to market price fluctuations. We know that option sellers often sell at the money, call and put options. If the market moves sideways, they make profit because option prices drop due to theta decay, causing the straddle chart to decline like this. When I say to enter on a breakout, it's based on the Dow theory. If you're not familiar with Dow theory, it basically says that when a previous swing is broken, that's your signal to enter the trade. We will dive deeper into this in the video. Breakout on the straddle chart. Once you see a breakout on the straddle chart, switch to the spot chart to see where the breakout happened. If it's on the upside, buy a call option. If it's on the downside, buy a put option. All right, let's put this into practice by examining 3 expiry days charts along with their corresponding straddle charts. Here's our first chart. This is the Sensex chart on 5th July. First, check if the market hasn't moved more than 1% from day high to low till 2:30. We can see here that it has only moved 0.49%, so it becomes a candidate for our gamma blast strategy. So now, look at the at the money straddle chart at 2:30 p.m. You can use a site like iCharts or Sensible. For this, I'll be using iCharts. Here, select the symbol as Sensex. The expiry date is 5th July. Then select the strike price. It is the price of Sensex at 2:30 p.m. So let's go back to our Sensex chart here. We can see that the current price of Sensex at 2:30 is 79633. So the strike price to be chosen is 79600. Set the time frame to 1 min. What you see here is the straddle chart of Sensex. Now wait for the breakout of the previous swing high. But here you can see that the price is making lower lows after 2:30. Finally, at 3 p.m. when you spot the straddle chart is breaking the swing high. That's your entry spot. Now, look at the Sensex chart to see where the price breaks. Whether it's on the upside or downside, you can see that the price is breaking on the upside. So buy the at the money or 1 strike out of the money call option. But always keep in mind that OTM trades are risky on expiry days because chances for the price to go to 0 are higher. Now, we can take a look at the options chart. At the time of breakout, the price is around 15. Enter the trade and wait for the price to become double or triple, so that your risk reward should be 1:3. So here your target should be 45. If you are experienced with reading charts, you can even aim for higher targets. Here you can see that the price has almost went to 210. It's almost 14 times. Now we can see another chart. This is the Nifty chart on 27th of July. First step is to check whether the market has moved more than 1%. So here you can see that it has moved only 0.96%. So this can be considered. Now look the price of Nifty at 2:30 p.m. You can see that the price is 239.20. So the at the money straddle chart strike price is 23,900. Coming to iCharts, set the details as before and view the straddle chart. Here you can see that by 2:37 p.m. the breakout happened. So next step is to look at the Nifty chart to figure out where the breakout happened. You can see that it happened on the upside. Now, buy the call option and target for double. Looking at the options chart, the entry price is around 50. As you see, the price went high up to 140. But always consider that the premium will go to zero in no time if it is moving against our analysis. For our final example, this is the chart of Nifty on 4th June. Let's first check if the market moved more than 1%. Oh, look at that! The market moved more than 8%. So, this day isn't good for our Gamma Blast strategy. And that's a wrap on Gamma Blast. Remember, always practice these strategies before applying them in real markets. Hope you liked the video. Thanks for watching, and see you soon.